Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of Paris milling wheat and London UK feed wheat. Paris milling wheat. 27 weeks ago, so just over 6 months ago in other words, I said the following, and I quote, "We may have another bearish but less aggressively bearish pattern, though not necessarily by much. It is a mid-June to date bear channel, currently 213 to 288 at the moment, which is highlighted in bright green on my daily chart. I'm not saying either of these two will be the way forward, but if you favour the bearish side, then these are worth considering." End of quote. 8 weeks ago, the market created a cusp and we had a break higher as the bearish pressure gave way and prices surged higher, something I'd cautioned about 4 weeks prior. The market rose up through the stratified layers of resistance. Some of them seemed and still seem quite dense, such as the congestion area 238 to 242, containing the March 2013 high at 240. The short medium moving average currently at 240 also. The February 2013 high at 247. The declining medium moving average currently 245, followed by another congestion band between 250 to 255. with a 2013 high at 253 within it. After that, we had and still have another small congestion area between 258 to 260 with the 2011 high within it at 258, followed by a bit of a deserted up to some of the most heavy looking congestion area available between 267 to 270. All those numbers are enough to be going on with for now. The question I posed last week was whether the moves lower had triggered the beginnings of a new bullish movement. The weekly key reversal down pit back 3 weeks ago looked like the answer was for a move lower, but the response, really the action from late June to date, ended with a small rounded bottom pattern, and we are still where we are back in April, still below the heavy duty overhead congestion between 267 and 270 after testing and failing it, and just above the congestion between 250 and 255. This leads me to my final point, formation of the lip, a possible descending scallop pattern here. I said 5 weeks ago that this daily chart had the makings of a better example of descending scallop pattern than in the other grey markets. However, the hesitation to form the lip had been fairly minimal, though the weekly key reversal down helped the case for a descending wedge pattern quite a bit. However, the spanner in the works had been the construction of the recent small rounded bottom pattern. This hindered the case for a descending scallop pattern, but unlike say Chicago wheat, the impact here has been less onerous. So for now I will still have the possibility of such a pattern, but it will mean that what happens now in the further construction of the descending scallop pattern will be under even more scrutiny from me. Now, all this action since late May to mid-July has allowed me to draw a bullish Andrews picture, which is highlighted in dark blue on my daily chart, and which sees the market in between the overhead middle time, currently at 285, and the lower time, currently 243. Below, I am very cognizant that such a pattern throws another spanner into the works regarding the idea of a descending scallop pattern. But I would rather say what I saw than just pursue one avenue, which might finish up being actually a dead end. London UK feed wheat. The recovery rally from the mini reverse head and shoulders pattern formed roughly over the middle of May to middle of June petered out in late June, with prices turning back down, not even wishing to look at the next major congestion overhead of the then declining medium moving average. It's currently at 191 even. However, the decline halted ahead of a dip formed from the head and shoulders of the reverse head and shoulders pattern. Looking again at this drop in early July, I'm still not sure why prices went down that far. Possibly a double bottom. I haven't really decided on that one. Or why they halted where they did, when it looked as if prices could easily drop to the June low or even the July 2021 low at 164 even. However, this is what they did. This failure to exploit the move lower led to the recovery back up at the start to middle of July, though the move up was a bit dramatic, even if it was the final part of a double bottom pattern. It was in this rise that prices met their first real obstacle, the declining medium moving average again. This managed to hesitate the market 2 weeks ago, around this moving average, but last week prices took off again with an unusual shooting star pattern, type 2 bullish, yeah, one of those, they do exist. The market rose up through the March 2013 high at 205.05, the 2022 low at 206.5, and even the 2013 high at 215. But it was just above this congestion that prices last week and this week met and halted at a significant resistance. And that's the long moving average, currently at 216.15, along with some nearby Fibonacci and other congestions. Okay, so I'll now look at the bigger picture, as it shows some interesting perspectives onto the recent action. To start with, the action here is obviously different on this daily chart when compared to other grain markets. I also mean the chance of a possible descending scallop pattern here is different than what has happened in the other grain markets. The chance for such a pattern forming in London feed week is still there, but the very recent aberrations we saw in this pattern, specifically the dip in late June and early July, does not seem to be so influential on the overall pattern. So where does that leave us now? Well, I suspect the descending scallop pattern may be coming to completion in the not too distant future, if that indeed is what is going to happen, is going to become. So the action over this coming next week and the week after may be critical in deciding the outcome of this pattern. I am specifically interested in whether the action for the descending scallop pattern should start from the high in February or should it start from the high in October. For me, this judgment call is still yet to be made. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.